Hello everyone, welcome to the presentation on the role of accounting standards. I am Dr. J. Jasmine Bastina, Assistant Professor of Commerce, Corporate Secretaryship at Sri Kalishwari College, Sirahasi. I am going to talk to you about a very important topic in the field of commerce and accounting, that is the role of accounting standards. Let's begin by understanding what accounting standards are and why they are essential in today's business environment. So first, what exactly are accounting standards? Accounting standards, it is often called AS. It is a written rules and policies created by official bodies such as the Institute of Chartered Accountants of India or ICAI. These standards are like a guidebook for accountants. They tell us how to properly recognize, measure, present, and disclose every financial transaction that a business makes. Now you may wonder, why do we need them? Well, think of it this way. Just like how grammar brings structure to a language, likewise, accounting standards bring structure and uniformity to the financial reporting. In India, the ICAI introduced accounting standards in the year 1977 by forming a special body called the Accounting Standards Board or ASB. The very first standard, known as AS1, was titled Disclosure of Accounting Policies. It was issued in the year 1979 and it became mandatory from 1st April 1991. So you can see the system of accounting standards has a long and important history. Now let's talk about the roles played by these accounting standards. The first and one of the most important role is uniformity in financial reporting. Accounting standards ensure that every company, whether it is a big or small, it follows a consistent method of preparing and presenting their financial data. This consistency is very helpful. It makes it easy for investors, banks, and stakeholders to understand the financial health of a company. Also, when reports are uniform, we can compare one company's performance with another company's performance, just like comparing one apple with another. The second important role is to enhance transparency and reliability. Accounting standards provide clear rules on how transactions should be recorded and disclosed. This clarity makes the financial reports more honest and accurate. As a result, people, especially investors and creditors, begin to trust these reports. In simple words, it removes confusion. It gives confidence that the numbers are not manipulated. Next, the third one is comparability. When businesses follow the same accounting standards, it becomes very easy to compare their financial statements. For example, if two companies are in the same industry, we can study their reports side by side to see who is performing better. This is very useful for investors and business analysts. And then the fourth role is about protecting the interest of stakeholders. Accounting standards ensure that companies show a true and fair picture of their financial position. This protects everyone who is connected to the business, like shareholders, employees, creditors, and even customers. Then the fifth role is ensuring legal and regulatory compliance. In many countries, including India, following accounting standards are legally required. So, when companies follow these standards, they are obeying the law, and this helps them avoid penalties and legal trouble. The sixth role is that these standards assist auditors and regulators. Since there is a standard format and set of rules, auditors find it easier to check whether a company's financial statements are correct or not. Even government regulators can also monitor and control businesses more effectively when all companies follow the same accounting rules. Now, the seventh role of accounting standards is helping in economic decision making. Investors, managers, and business owners all depend on accurate financial data to make decisions. Whether it's about buying shares, launching a new product, or planning for the future, accounting standards ensure that the numbers are dependable. And finally, the eighth role is about international acceptance. Today, many countries have adopted International Financial Reporting Standards, that is IFRS. By following global standards, Indian companies become more acceptable worldwide. This helps them attract foreign investment, expand their business globally, and build partnerships with companies in other countries. So, to conclude, accounting standards are not just rules. They are the foundation of trust in the financial world. They bring uniformity, clarity, and credibility to financial reporting, which helps everyone from business owners to investors to policy makers. I hope you now have a better understanding of the role of accounting standards and why they are so important in commerce and business. Thank you so much for watching this presentation. Thank you.